For more on Apple's results and the stock reaction, I want to bring in Angelo Zino. He is an analyst at CFRA. Good morning to you.
Good morning.
You saw a couple of your peers or
Yep.
your colleagues in the business have a view on this. Are you worried about Apple sales?
We're actually not worried about Apple sales.
iPhone sales is what I really should say.
I'm sorry, yeah, iPhone sales. I mean, when we kind of look at the results here, I mean, I think, really what investors should be looking at is the high quality beat. And really from that, we're looking at wearables as well as services. You saw nice beats on both of those ends. We think that continues to be the story. We think investors continue to value those businesses a lot higher than the iPhone side of things. And even if we did see that 9% decline in iPhones, again, we're not looking for any sort of growth here over the next cycle.
Right.
5G.
5G,
in
you're
the fall
expecting a major cycle. What do you need for that to happen? Because there's so much weight now put on 5G.
Absolutely. So when we look at 5G here, right, I mean, when we look at fiscal 21 estimates, I think it's really important to note the street's only looking at about 7% growth. We think that number is way too low. As a result, we're looking for mid-single-digit growth on the iPhone unit side of things in fiscal 21. So nothing no blockbuster type of hit. We actually think it's going to be more of a multi-year cycle in terms of 5G.
And then in terms of wearables, we've been talking a lot about people talking about stocking stuffers. By the way, they'll be expensive stocking stuffers. Right. I mean, cheaper than a phone, but the fact
this is
that
a gift. This is a gift, not a stocking stuffer.
The fact that people are paying $300 or $250 for headphones is quite a remarkable.
Yeah, absolutely.
When the phone itself used to be able to get a phone for $300.
Right, and I actually think that kind of gravitates to the pricing power that Apple has out there. I mean, Apple has continually been able to kind of increase prices, throughout the years. They've been able to do it, absolutely with the phone, right. Despite the fact that they did a very unlike move with the iPhone 11 in lowering a price point there. But I think kind of, it really speaks to the pricing power of the company here.
There's a question on Twitter that's a good one. Apple generated less in terms of sales and less in terms of net income for the full year 2019 than 2018. The stock is up pretty sharply. Why is that?
It's interesting because, I think especially when it comes to Apple, I think investors are just very highly anticipatory in nature. When we look at the last 12 months, we're looking at unit volume, down about 15% for iPhones. When we look at the next 12 months, we're actually not looking for much of anything. Again, we're looking for about, flat to slightly up in terms of the unit side of things, largely because of the favorable comps that we're going to see. I think investors continue to be very forward-looking in nature in terms of that 5G cycle.
Right.
I think they're also looking very much at kind of the mix here in terms of wearables and services.
I will add to that they continue to buy back a huge number of shares, so earnings per share is only down by 2 cents.
They've reduced their share count by about 32% since 2012. So, I mean, that in itself kind of tells you the free cash flow, that monster that Apple is and what they're able to do.
Too.
Yeah.
Reducing the float, and it's still going to be $1.5 trillion, maybe.
Yes.
I mean, nobody knows. You think it'll be $1.5 trillion? You figure?
No, over time, we think it can go a lot higher than $1.5 trillion, personally. So, again, we think we're in the early innings in terms of services. We think we're maybe in the second or third inning. And, over the next decade, that's a business where we think could actually, triple over the next decade.
The early innings was when it was worth $9 billion.
Right,
Before Jobs came back. Do you remember that?
Yeah.
Gil Amelio was like John Scully.
Yep.
Angelo, what do you make of the margin story, though, on wearables relative to the other products?
Well, it's interesting. Obviously on the services side of things, we're a lot more optimistic in terms of the margins, 2x that of the hardware side of things. In terms of the wearable side of things, I think the pricing power is going to come in there. The problem is, on the margin side of things, we just haven't seen any of the wearables or the services really flow through into the higher margins, and that kind of speaks to the concerns on the actual hardware side of things in terms of iPhones.
But in terms of pricing, right now, $250 for headphones.
Right.
Pretty amazing.
Absolutely.
Do you think those types of products become commoditized? Or do you think because of the interaction with the phone, by default, they have a sort of a leg up, if you will? We do.
And we actually think the adoption rates right now are extremely low in terms of both the watch as well as AirPods. There's so many legs to really go in terms of that. Our view is over time, especially on the watch side of things, as it becomes more of a healthcare feature, we actually think there's actually more upside potential to the price point in terms of wearables.